today's video, we are going to talk about FHA loans because in 2025, they're still one of the most popular and realistic paths for first-time buyers that want to own a home without having to put 20% down. So let's go ahead and let's talk about these FHA loans. So what exactly is an FHA loan? An FHA loan is a mortgage that is insured by the Federal Housing Administration, and it's designed to help buyers who may not have perfect credit or a huge down payment saved. So the FHA doesn't lend you the money directly. It's going to be the lenders that are giving you the money. But what the FHA does is it backs the loan, giving the lenders the confidence to approve more buyers under more flexible guidelines, which is a great thing for you as the buyer. That's why FHA is such a game changer, especially for people who are financially ready, but they don't think that they can qualify under conventional loan rules. So let's talk about the down payment requirements for 2025, and it's a question I get all the time. Here's one of the biggest perks. FHA still allows as little as 3.5% down if your credit score is 580 or higher. So if you're buying a $500,000 home in Nassau County or Suffolk County, your down payment could be around $17,500. If your credit score falls between 500 and 579, you can still qualify, but you'll need to put at least 10% down. So most first-time home buyers I work with land in that middle range. You know, they have solid credit, consistent income, and 3.5% to 5% down. That's usually enough to get a smooth approval without completely draining your savings and losing all of your money. So now let's talk about credit and debt to income ratio, also known as DTI. Okay, and let's talk about credit and debt because these two are very huge factors. So FHA, their flexibility is one of the biggest advantages. While most conventional loans want to see scores above 680, FHA is perfectly fine with scores in the 600s, and sometimes even a little bit below that. The debt to income ratio, that is going to be your total debt payments divided by your gross income. It can go as high as 43 to 50% depending on your overall profile. So if you're earning $7,000 a month before taxes, your total debt, including your new mortgage, should stay around $3,000 to $3,500 max. That flexibility gives a lot of first-time buyers a little bit of breathing room, especially if you've got car payment, you've got student loans, which everyone has. Okay, property requirements. Let's talk about this. For the most part, this is where FHA can be a little bit stricter than conventional loans. The property that you're buying, it has to meet FHA's minimum property standards, meaning the home has to be safe, sound, and it has to be structurally secure. There's a lot of rules around this. So if the appraiser spots issues like peeling paint, missing handrails, going to the basement, roof damage, these things usually need to be taken care of before FHA will approve and you can close. So if you're looking at older homes in places like Freeport or Brentwood or Elmont, you just keep that in mind. A small repair list isn't unusual. It doesn't mean the deal's dead. You just want to plan ahead and work with an agent who knows how to navigate FHA repairs and that can spot them from the beginning. Okay, let's talk about the loan limits for 2025. Here's where things get very interesting. FHA loan limits just went up for 2025. So for Nassau and for Suffolk County, the single family FHA limit is now around 1.09 roughly because of New York City metro pricing. That means FHA isn't just for entry level homes anymore. You can actually use FHA financing in higher priced markets while still taking advantage of the low down payment and flexible credit rules. Okay, let's talk about mortgage insurance, MIP, and let's talk about the trade-off, right? So let's talk about what you pay in exchange for that flexibility. Okay, the mortgage insurance premium or MIP, FHA loans, they come with two parts. Okay, so they come with an upfront MIP of 1.75% of your loan amount, usually rolled into the mortgage, and a monthly MIP typically between 0.55% and 0.85% depending on your down payment and your loan size. Okay, the monthly MIP stays on the loan for the life of the loan unless you refinance into a conventional mortgage once you've built at least 20% equity. So that's one of the reasons why I always tell clients to revisit their mortgage every few years, especially with how quick home values have risen in places like Seaford and Lindenhurst, Smithtown. These areas are shooting up very quickly. A quick refinance could save you hundreds a month once your MIP is gone. So here's the bottom line. FHA loans make home ownership possible for a lot of people who would otherwise really just be sitting on the sidelines. They're very flexible, they're affordable, and they're backed by real protections. But you've got to understand the details before getting involved, before jumping into this. So if you're planning to buy in what's remaining of 2025, take the time to get pre-approved, check your credit and understand your loan options. That way you'll be ready to move when the right home comes along instead of scrambling, once it hits the market. So very important to just have that preparation in place. And if this video helped you to understand FHA loans better, check out my free training here, which is called How to Go from Hesitant to Homeowner, How Smart Buyers Win in Any Market. Click that video right now, and I look forward to seeing you all again in the next video. Take care.